Hello. For many small businesses, 2018 was a good year. To help you leverage that success, we wanted to share this video with you. Company retirement plans can be very complicated or very simple, depending on your needs. Our goal with this video is to focus on the simple, give you a high-level view of just a few of the potential options available, and to help provide successful entrepreneurs some ideas for long-term retirement savings, current tax savings, and potentially higher employee satisfaction. We'll attempt to keep this free of technical jargon, but keep in mind all company retirement plans are covered under the Employee Retirement Income Security Act of 1974, commonly called ERISA. Therefore, as befitting our Congress, it's a very complicated, technical, and obtuse piece of legislation. You're encouraged to seek professional tax and legal advice for more comprehensive detail. So let's get started. The first thing to be clear on when thinking about company retirement plans is keeping straight the different types of contributions that are made to the plan. Broadly, there's two types: the employer or company contributions and employee or participant contributions. Remember that you as the business owner contribute both as the employer and as the employee. Also, as an employer, there are matching contributions and potentially profit-sharing contributions. Matching contributions are just that. You match up to a specified limit what the employee contributes. Employer profit-sharing contributions are discretionary, made by the company to all employees or participants. So what are the advantages of a company retirement plan? As an employer, a company retirement plan may help you A, save for your own retirement, receive tax credits and other incentives from the federal government, attract and retain better employees, and deduct all employer contributions from current taxes. You and your employees may benefit because they can save and invest for their future, realize tax-deferred growth on any potential growth in their savings, and be more content and therefore hopefully more motivated with a benefits package that includes a company retirement plan. So which retirement plan is right for you? There is no one right answer. Each plan type has variations in contribution limits, costs, vesting schedules, and reporting requirements, to name a few. To find out which options might be more appropriate for your situation, think about the importance of the following items. As a business owner, one of the first items to consider is how much of a contribution do you want to make for yourself and for your employees. Contributions can be tax deductible if you choose, or after-tax contributions. The second primary consideration for you as the business owner is how many, if any, employees do you have, and what level of employee turnover do you anticipate. And third, if you have employees, what level of employee contributions do you anticipate they would be willing or able to make? Answering these questions will help narrow down the appropriate options for you to consider. So what are the main considerations if you do not have any employees? If you do not have any employees, the main considerations are easier. Primarily, how much would you like to contribute and how flexible do you want those contributions to be? Potentially, it can be that easy. So what are some of the more common small business retirement plans? At a very basic level, you have your payroll deduction IRA. And it's technically not a retirement plan, but it helps your employees save for retirement without the responsibility of an employee benefit plan. It's a simple way for employees to set up and fund an IRA for their retirement through payroll deductions. Next are SEP IRAs. SEP IRA stands for Simplified Employee Pension Individual Retirement Account. It's available to any employer or sole proprietors. It offers flexible contributions that are easy for you as an employer to increase, decrease, or suspend. The maximum employer contribution limit is $55,000. You're capped at 25% of the participant's compensation, which is yours, at a compensation limit of $275,000. Main things to remember: whatever percentage of income you contribute for yourself, you contribute the same percentage to all of your employees. The next type of small business retirement plan is called the Simple IRA. It's generally available for any employer with 100 or fewer employees. A Simple IRA, savings incentive match plan for employees, is that it allows both employers and employees to contribute to IRAs set up for the employees. It's very suitable as a startup retirement savings plan for small employers not currently sponsoring a retirement plan. The main difference between a Simple and a SEP is that the Simple allows for employees to contribute, and the employer contribution does not have to be at the same level as the employee contribution. Maximum participant contribution limit is $12,500. Total contribution limit of $25,000. Next is the more widely recognizable 401k plans. And 401ks are available to any employer except governmental entities. They have the highest contribution limits of all plans, and owner-only 401ks, i.e. a small business owner who is the only employee and worker in the firm, they can be very attractive for very high-earning individuals. The maximum participant contribution limit is $18,500, with a total participant and employer contribution limit combined at $55,000. The advantages are that employees contribute to their own accounts. The employer advantage is there's a vesting schedule for companies that have high employee turnover. And for participants, the high contribution limits are very attractive. As you can see from these snippets, company retirement plans can get deep in the weeds quickly. The important thing to remember, though, is that you, as the business owner, only need to know and understand what is relevant to you and your situation. In many small business situations, by answering the questions we started with, what level of contributions do you want to make with yourself? How many employees do you have? What kind of turnover do you have? And what type of contributions do you think the employees would make? By answering those simple questions, you have the potential to substantially narrow down your options. So for help in evaluating how a small business retirement plan can benefit you and or your employees, please reach out to us at Sound Advice Financial. Thank you.